Welcome to VIP Money Farm. This is Mr. Rich Pig. Here we'll be discussing business and investment opportunities and strategies. Please be advised that this is not financial advice, it's just entertainment and financial information to help you do your research. Let's go. Today I want to introduce you guys to M1 Finance. M1 Finance is a platform that allows you to invest in the stock market. It allows you to also create your own retirement account and pretty much your own mutual fund per se, right? And also you can create your own ETF, right? Um, and also your own, real estate. I'm gonna do a little deep dive into this particular account that I help manage, right? I'm gonna block out some, personal information and so forth, right? So yes, it's a very user-friendly interface, and it provides a lot of different opportunities. I know most of us invest in the cryptocurrency market, and because the cryptocurrency market offers a variety of different opportunities, especially in terms of handling your own finance and managing your own money. But like we all know, the cryptocurrency market is very risky. It's a high risk space, and as investors, this is not financial advice, but we want to make sure that we are diversified, right? We don't have all our asset in the cryptocurrency arena, right? So I'm gonna kind of go through M1 Finance and kind of shows you some of the things that you can do with the sorry about that with the M1 Finance in terms of growing your wealth, passive income, and savings, and leveraging your investment to borrow from yourself in a sense, right? So we're gonna, this portfolio, as you can see, has $11,000 and a little bit over 11,000 and change, right? So there are two main section here, and as you can see, the percentage is very high. So we got I call this one the billionaire real estate club, right? So we're gonna take a look at it to see what it entails. So you can see this has 6,178, and the return so far is 12%, right? If we look at the dividend right here, the dividend earned so far is $554, right? And as you can see, there's a nice little uptrend, right? It hop and to the right, and we're gonna take a look at some of the 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 companies that we invest in. And as you can see, most of these I have Apple in here, but most of them, these are pretty much real estate companies. And when I say real estate companies, especially to this one right here, Prologist, they own properties all over the United States, England, and other countries as well, right? You can, deep dive and research each one of these to see if, these will fit your specific, portfolio. But most of these real estate companies, I researched them, and they own hundreds of different apartment complex. Some of them own hospital buildings, right? Malls, office buildings, warehouse, and so forth. So this is a way for you to, in a sense, invest in a broad scheme of real estate companies, right? Without you yourself have to um, start one for yourself, right? Because you know starting a business can be very difficult, right? So if we look over here, you can see that the percentage is split evenly amongst these real estate companies. Well, this one is Broadcom is not directly a real estate company, and we know Apple. Apple they might invest in some real estate, but they're not really an investment company. So as you can see, this one Universal Health real estate company. They invest probably like hospital building and so forth. So if we look here, as you can see, this one here, the return is 114%, right? This one, the return, there's a 48% decrease, right? So in cases like this, where this one is 63% down, but this is a solid in a real estate investment company. So one thing I normally do is I go here and I click on rebalance, right? And then what rebalance does, it it takes profit from some of these ones that are doing very well, right? 54%, 87% return, 66% return, and then it will reinvest in these ones that are, in a sense, at the moment, are down. Like this is 20% down, this is 63% down, and this one is 48% down, right? But you might be thinking, oh, you're losing money here. Oh, you're losing 48% here, you're losing 63% here, right? Why not invest in this one that's up 114% and this one that up 87%, right? The idea is that you want to buy low and sell high, right? So these one right here, they are high. So you want to sell high, and then these that are down, you want to buy low. Because eventually, these that are down, whatever the reason why they are down, you can buy low, right? Buy low, right? So that's what rebalance is. And M1, in a sense, does this automatically. You just click rebalance and it just sells what it needs to sell to rebalance the portfolio, right? So your investment is equally spread amongst these asset you have here, these companies that you have here, right? So that's it. Also, let's look at let's look at the dividends. So I got this one right here. It's doing very, very well as well as you can see. The dividend earned here is 631. So this one is doing very well, up 43%, right? And yeah, this one probably need to rebalance soon. I'll give it another month or so. But as you can look, most of these are doing very well. 48% here. This is Gap, right? They offer good dividend return. This one is 21%. 7% here, 33% here. This is a very good one as well. And 114% here. This one, 228% here. These are doing how much your bank is giving you. Well, zero. Maybe if you're lucky, you may have a money market account that gives you, 0.5% or something like that. But with M1, that doesn't cost you anything. You can create a nice portfolio and look at these return, right? These are nice solid return. Even at 11% that you see right here would be good, right? This one, 274%. This one is down, 2.2%. This, down 20%. But as you can see, on an average, they're all doing well, right? Then if I do a little rebalance here, then it will, take from sell some of the profit that from some of the companies that are doing well, and buy like Walgreens. We know that Walgreens is not going anywhere anytime soon. At the moment they just have not doing so well, right? So that's the main two. And Vanguard, Vanguard, they do pretty well in terms of you know dividends and stability, right? So with with M1, you can select your companies that you wish to invest in, and create your own portfolio, right? Create your own retirement, right? So my strategy is, when I take profit in the cryptocurrency space, I bring some of those profit into M1 and buy some stocks, right? Because it's a little more stable in the stock market, right? You're not gonna come one day and see 90% drop in your portfolio and 99% drop in your portfolio, right? We're not gonna have those unpredictable crash, right? So as you can see right here, um, what you're looking at right here, you see you have auto invest right here, and what this means is that the dividends that you received on a weekly, monthly, and quarterly basis, it adds up, right? And I set it where I'm going to change this to 30. I set it where as it reached $30, then it automatically, that $30 automatically reinvest in the entire portfolio, right? So it make additional purchase, right? So this way you're earning passive income, and um, your account is automatically investing that passive income to grow your portfolio, right? So let's look at activities. So the activities section, as you can see, I'm gonna kind of filter to only dividends that's received. So as you can see here, these are dividends payments from the different companies. This SAfuugo is a real estate company. This one is a real estate company as well, and most of them are real estate companies, right? And as you can see here, this is a payment for $4. This is $3.60. This is $12. This is 5, 9, and so forth. You get a picture, right? And if I click next to the next page, you see the days that these dividends are received. And you can see $4, $6, $2, 6.42, and all these dividends, they adds up, right? And you can just go back as far as you can. You can see these payments coming in, right? And they all adds up, right? They all adds up. So for example, if you look at this one, right? And in a sense, you said, okay, it's $4, but maybe $50 would be better, or you know, or $100 would be better, right? So basically, if we go back to the home page, we see $11,314, right? So if you want to have, say, the average dividend payments is $4, right? And you want to have, say, get $40 coming in each time you get a dividend payment. Then maybe you want to have 10 times the amount you have here, maybe $100,000, right? So say if you have a $110,000 or $150,000 portfolio, then excuse me, then these dividend payments that you're receiving, instead of 550, it'll be like $55, and this will be like $120, right? This will be like $36. This will be like $10 and so forth, $26. So the more your portfolio is valued, is the higher these dividend payment will be, right? And as you can see, in every couple of days you get in, right? This is June 30th. You can, this one right here, there was something going on with Icon Enterprise, and so they pay like $10 and then they subtract back $10. So I removed them from the portfolio recently, right? Because this particular company wasn't doing so well. But other than that, you can see July 3rd, we get like, two payments here. July 5th, we get a couple of payments here. And 14th, 17th, and the 21st, we get a couple of payments. So this one right here, the same thing I was explaining earlier, it was 4 buys. Let's take a look at that. So there were 4 buys, 541, 1,022 in Walgreen, in Vanguard, $15 into Walgreen, and ExxonMobil is $3.90. So that $26, 4 buys spread amongst these 4 different companies. So you'd be like, so where that $26 came from, right? The $26 is the sum of all these dividend payments. So once it reached $25 or more, then it automatically buys more from your investments, right? Excuse me. So, so if we go here into holdings, this is like a broader picture of your entire holdings, right? So if you scroll down, you can get a wider picture. It's not categorized like in a real estate or dividend geared portfolio, right? Excuse me. So that's that. So if we go over to borrowed, right? One of the beauty with M1 is that at the moment, right, based on the value of the portfolio, I can borrow up to $4,500, right? And the interest rate on that is 8.5%, right? So if you have a credit card that say it's a 20% interest rate, right? You can just borrow from yourself right here and pay off that credit card and just pay back M1. And the thing with M1 is that they don't check your credit, right? Because you're using your investment as collateral, right? So in a sense, if you run away or you decide not to pay it back, then they pretty much just liquidate your asset and pay back themselves. But there's no due date when to pay, right? There's no due date. They charge a little bit of interest. The 8.5% interest, right? But there's no due date, there's no late payment. You just pay back whenever you feel like, right? This right here, this was just a test transaction I did back in 2020, which I returned back. But yes, you pay, you can use the 4,500 to pay out some credit card bills or whatever, and then you just pay back at your own pace, right? So if you want to buy a used car, you can just come here and send this fund, click borrow, and send it to your bank account and do what you need to do. If you're going to do a short-term investment, like invest in something where you can flip it real quick, you can just borrow here, do the investment, take a profit, and then return back the money right here, right? So this is how the rich leverage their investment to do other things. So in a sense, and say if this was $110,000, then you could in a sense borrow $45,000 to do whatever you want to do, right? So yes, it's not. They have other option. They have a M1 checking account, and as you can see here, it's a high yield account. Maximize your cash with 5% APY for M1 Plus. M1 Plus is another feature where you can unlock many different features. In a sense, you're upgrading your M1 account. So if you join the M1 Plus, I think the fee is I think you get 3 months free here. I think it's $120 a year. Um, I haven't looked at it recently, but these are different perks, right? Up to 10% cashback, 5% APY on savings, and you can you get a little savings, a little discount on the money you borrowed, right? And as you can see here, it's $95 a year, right? So the $26 discount, right? Or $10 a month, right? So if we go back here, you can see that if you have the M1 Plus, instead of you paying 8.5%, you're going to pay 6.95% on your interest, right? So yes, that's the savings account. You can use it as a savings account as well. And yeah, that's it. Now they have the card. You also get a card too that you can activate and so forth, right? You see spending limit, just like a regular bank account. You can section where this area now is where you can come and you can read the latest news to inform yourself on your investment decisions. You can come here and you could research the different stocks, right? So if you go to say Apple, you click on Apple and you can deep dive, right? You can show more and you get a basic understanding of what the company is about, right? And you can visit the company's website from here to do a little more deep dive, right? Shares outstanding, the amount of employees, all the vital information that you need to make an informed decision whether to invest in the company or not, right? So that's stocks. So you go back here, let's take a look at one that we're not so much familiar with, right? Most of these we're familiar. Let's look at this one, right? Here we can see past performance. We got the chart here. You can go weekly, month, year to date. We can see what they're doing year to date, and so forth. 2 years, 5 years, and so forth, right? And all the vital information we have here to make an informed decision, right? Information on the company, and then we can go directly to the website from here. So yes, that's that. Funds, if you want to research funds, you can come here and you could do your research as well, right? You can look at 2-year return, 5-year return, right? And deep dive into the different funds, and you can just add these funds to your portfolio, right? You can look for funds based on their sector, right? So you can like industrials, right? Currencies, commodities, whatever sector you want to look at. The same thing with the stock already, right? So if you want to deal with finance, you can break it down. So right here you see 835 companies regard to finance. And we say finance, looking at JP Morgan, Bank of America, Wells Fargo. You can do your research here. If you want to say get into, let's look for real estate. This is retail. Let's take a look at that real quick. So retail, we got Home Depot or Costco, Alibaba, Lowe's, Target, and so forth. Let's see what transportation. So you get the gist. You can break it down. FedEx and so forth. It's very user friendly. The health sector, like during the pandemic, the health sector was doing very very well. And so for consumer communication, um, you get the gist, right? Utility, Utility is a very good sector as well. So you can be well diversified, right? Um, yeah, minerals, health, industry, energy, manufacture, and so forth, right? Then recently they introduced Bitcoin. So you have Bitcoin, Ethereum, and Litecoin, and I know they probably gonna have more addition in the future. But at the moment, you can have a little exposure to the cryptocurrency, right? They don't have those DeFi stuff here. Then the Pi section, you can come here and you can design your Pi. And what I mean by Pi, you can create, say, a Pi for the real estate sector, or the energy sector, or the retail sector, or you can, you know, unpick the companies that you like to be in your Pi, right? And then you can come, if you, in a sense, feel like you need some assistance creating pies, you can come here and you can see, pies that are already created, right? So this one says just general investing, right? You click on it and it provides some pies. This one has 10 holdings. Let's look at what's in here. So this one says the return is like 27%. So you could look into this and see what the holdings are. So as you can see, there's a lot of Vanguard. I mean, you can be more conservative with Vanguard, right? And you can see return right here. And another cool thing is, say for example, let's go back to here, my portfolio. You can actually, say you have a friend and you want to introduce them to M1, you can click share and you can send this link and they invest in the same thing that you are investing, right? And they don't have to start with 10,000 or whatever. They can open their account and they can, in a sense, start off with $100, right? And start their journey right there. And every paycheck they can add another $10, another $20, and just simply grow from there, right? So yes, the research section, you got the crypto, you got the Pi, the experts where we were, hedge funds. You take a look at hedge funds, a real quick look, and we can see here. We can see the earnings, right? So this 120% return. Let's see what they got in here. As you can see, the chart is doing very well. Let's take a look. Yeah, past month 6%, quarter 10%, a year 32%, 3 years 70%, and 5 years 120%. Right, right here you get a brief description of what the fund is about, and down here you can see what they have in their fund. Right. So what you can actually do, you can add this portfolio to your overall portfolio, or you can just come in and you can see, okay, well, he has a lot of money. These top companies here is a big part of the portfolio, right? Lowe's is 24%, and this one here, restaurant brand, 18%, and Chipotle, 17%. You could just come here and, okay, I'm going to take these three, right? It must be important why they invest so much in there. And then this one here, let's take a look and see what they invest in. As you can see, they were down recently. I'm not sure what's going on there. Well, you can look in their portfolio and see where they have most of their money, right? And if we go back, let's see, go back. We got just stocks and bonds, different strategy, responsible invest. Let's look at retirement and see what they got there. So retirement, this one 40 aggressive, right? I guess if you're gonna retire in 2035, or if you're retiring in 2020, but say your retirement gonna be in 2035, then I guess you want to go more aggressive. So let's see, they have 43% in the past 5 years. Let's see what they have. See, they're mostly a Vanguard in this one, right? So yes, you could come here and create your portfolio. You got your watch list where you could, keep an eye on those that you want to watch, right? Yes, so that's that. M1 very user friendly, right? So that's it, guys. I have my links in the description below if you want to go and invest in M1 as part of your diversification. Again, guys, like, share, comment, right? And help support the channel. Please leave a comment down below and let me know if you like this sort of video, right? All right, take care.